Hello everyone, my name is Rainer and welcome back. So the last couple of weeks I was actually inactive, reason being I headed back to the army for my annual in-camp training. So while I was in camp I did not have access to my computer. So that explained why I wasn't able to actively communicate with you guys, to share with you guys as well as to actively trade the markets over the last couple of weeks. So nonetheless, this week I'm actually back. So I'm actually pretty excited to get back to the markets, get back to trading because I was looking over the charts this weekend and I noticed that we have beautiful moves across, the majors, the energy markets, and definitely trading opportunities for trend followers like me. So this week I'll be looking to cover namely three products, alright? The first one being the crude oil market, followed by the dollar yen, and last but not least we'll be looking to cover the Aussie dollar. So without further ado, let's roll. So this is the daily chart of crude oil, and before I begin I would like to actually highlight to you a post I made some time back on my site. And as you can see, it was dated on November 12th, 2014. And in that I mentioned that on the daily we notice that price tends to bounce off the 20 EMA. Traders can consider shorting on pullback or look to trade the breakout to the downside. So with that, looking at the charts, alright, the vertical line demarcates November 12th, which is the date I actually posted that commentary. And going forward, you notice that there's actually two potential trading opportunities for traders to take advantage of that piece of information. The first one being here when price tested the 20 EMA, and the second one being when price broke out of this low over here, right? So there's actually another breakout entry towards the downside. So two possible setups and scenario for crude oil. So I hope traders out there actually did manage to profit from this piece of information I shared with you guys. And personally, I got short when price broke out towards the downside. And as you can see over here, I have been actively short crude oil since $90. Then I scaled in at 87, 82, and the most recent one being at $76 sometime back. So on crude oil, traders will probably be asking, hey Rainer, price of crude oil has plummeted to a low of $68, so are you still looking to short? It's oversold. And the simple answer is yes, I'm still looking to scale in my entry and short crude oil. And reason being is that the trend has been bearish, and from left to right you look, it's a very clear downtrend. So a very clear downtrend I highlighted here, very clear. So no reason to predict that crude oil would retrace or actually reverse from here. It's not my duty to predict when the trend ends. I'm a trend follower, not a trend predictor. So looking at this, again, possible setups will be the same. If price retraces back towards the 20 EMA, I'll be looking to short. Or similarly, if price takes out this low over here, I'll look to short the breakout towards the downside. So that's my take for crude oil. And next, let's have a look at the dollar yen. So this is the chart of the dollar yen, the weekly chart. And if you look at the weekly candles, we have 1, 2, 3, 4, 5, 6, 7, 8 candles, 8 bullish candles towards the upside. All right, basically 8 candles which open and close higher in the prior 8 weeks. So it's definitely very strong uptrend, strong bullish momentum, and I don't see any reason to actually want to short this market. I mean, you have 8 prior weeks of upside, and I don't see why would you want to stand in front of a fast moving train only to get crushed. So basically, if you want to trade dollar yen, I would only recommend trading dollar yen from the long side, which I've been actually pretty much long since 107. So look at the weekly chart, you will not find any trading setups down here. Reason being that the price action is compressed into weekly candles, so it's harder to find historical patterns that you can exploit. So what I usually do is I go down to the 4-hour chart, and it's easier to look for historical patterns to trade. So with that, I will always plot in my 50 period moving average followed by the 20 to give me a clearer indication. And down here you can see that now we have some historical patterns that we can work on. Right, notice that this area over here is what I term the value zone, right? Meaning that it's an area or levels where traders can look for long opportunity as price revert back towards the mean. So two opportunity you had for you, which is over here, as well as one over here. So traders would definitely have the opportunity to get long if they were to trade the zone that I've highlighted. So again, coming forth this week, I would be looking to long should price again retraces back towards this zone, this value zone that I've highlighted. Because to me, looking at this from a historical context, you can see that price tends to retrace, followed by pushing out towards a new high, and then retracing, and then pushing out to new highs. So so it tends to retrace, push out higher, retrace, push out higher, retrace. Then it didn't push higher, followed by another retracement. Then it pushed out higher, retrace, pushing out higher, retrace, pushing out higher. And I won't be surprised if this week price does retrace towards the value zone and retrace higher in the coming weeks. So that's my take for the dollar yen. And lastly, I'll be looking to cover the Aussie dollar, right? Aussie dollar weekly chart. So looking at Aussie dollar again, it's a pair that it's not yet being covered by analysts or the media, right? So I think it's pretty low profile as of now. And looking at the structure of this market, you can see that price recently took out this low over here. So when it took out the low, price then started trading lower in the last couple of weeks. So on the weekly chart again, like I mentioned, on the weekly chart, price action is compressed into a weekly candle, so it's harder to find historical patterns that we as traders can trade. So what I usually do again is go down to the 4-hour chart, plot in my moving averages, right? 20 and 50. And now down here again, once we plot that down, we can actually see historical patterns that we can exploit as traders. So notice that for the Aussie dollar, it tends to again respect this value zone that I've highlighted over here. So couple of trading opportunities for the Aussie dollar. So should price retraces back into this value zone, I'll be looking to short. Or similarly, second scenario is price consolidates for a while in the coming week, finally taking on this swing low over here, right? So there'll be a breakout scenario, and it's another opportunity for me to get short. So that's all I have for you guys this week, alright? Namely the dollar yen, the crude oil, and the Aussie dollar. So one thing to share with you guys about trend following is that as a trend follower, I will actually look to trade all these three setups I mentioned earlier. And the reason being is that I do not know which trades are going to play out, Even though we both can agree that the trend is intact for all three pairs, who is to say that, in the coming weeks, the trend may actually reverse and stop me out? I don't know which pair or which product will actually stop me out of my trades. The only thing I can do is actually identify low risk trades to participate with the trend. That's all I can do as a trend follower. And how much the market wants to reward me is entirely not within my control. My control is only to trade what I see and to manage my risk accordingly. And the rest I'll leave it to the markets on how much it wants to reward me. And that's something that as a trend follower you need to understand, because losses will come. Losses will come. And if you look at losses, we typically incur, 1 hour or per trade. But when we do hit a home run, for example, the dollar yen and the crude oil, we are looking at infinite R as profit targets. Alright, this is meant to be the infinity sign, right? Doesn't really look like an infinity sign, looks like a couple of eyeballs to me, and I apologize for that. But yeah, that's the message I'm trying to get across. Do not be afraid to take losses, because as a trend follower, the losses are kept to a minimal, and your targets are actually usually in the region of 20, 30, 40, 50 R. So really there's nothing to actually fear or whatsoever, because in the long term, in the grand scheme of things, your risk reward is always favorable to you. And that's all I have, and I wish you guys good luck and good trading. I'll talk to you soon.